What is up, YouTube? I think the audio is good to go. I'm back with another backtesting video. You guys apparently really appreciated the previous one of just like me raw, unedited trading, going over gold price action, kind of giving my thoughts out loud, and on showing how I note my trades down and how I actually learn from backtesting. Okay. So if you guys remember, we took that short here. We took it down to that low because, as we said, at the swing point, just a single tap doesn't normally hold. So we had that nice short, and that's kind of where we ended things. Okay. Before I get into the trading itself, I'll take a sip of my coffee. We had that Excel journey right here. And this is where we left off. You know, we had 8 trades in total. These were the results. This was the total percentage gain in 9 days with an 87% win rate. And these are temporary, right? I'm going to delete these for now. We're going to build more trades here. And I think I'm just going to make it like a tiny series where we just trade from September all the way to where we are right now. And then at that point in time, you guys should know how I trade, right? If we trade almost 8 months of 8-9 months of me backtesting, taking every trade I would have taken or showing every trade I would have taken, I cannot give you more than that. So going over the higher time frame first to remind you guys again, I still remember, but we were targeting these equal highs within the range, and we were following this like swing structure on the 3-day time frame, where we are expecting a higher low for a higher high here to take towards those highs in this 3-day order block with imbalance. In general, we're just in this range, and we deviated the low here, but we are expecting a higher low. Do we surpass that demand zone? Things could get a bit more ugly, since I just see some sell side liquidity here on the left, and then probably within here we have that nice demand remaining. So that's kind of the macro view. Always good to keep the macro view in mind when we are backtesting. Okay, and then let's zoom back in. So we're just gonna follow local market structure and then see where an actual accumulation forms for that potential swing higher low for swing higher high. Before I get into the trading, I just want to have a quick chat with you guys that you cannot do trading on the side, okay? Especially not in the beginning of your trading journey. Like, trading is hard, and you have to put the time and you have to put the effort in. I'm out here. I'm already a profitable trader, but I'm out here on my Saturday night. Yeah, I had to do finances this whole morning and take care of some stuff, and now I'm out here on my Saturday night while I'm 20. Okay, backtesting gold to improve my edge in the market. Like, if you do not take trading seriously, you will be liquidity in these markets. That's just how it works. It's player versus player, right? And you have to really look at yourself, because I'm planning on having a long backtesting session right now. Okay, I have coffee, I have water, I'm set up. I have eaten. But you have to realize that there's people like me out there putting in those hours just to perfect their edge, even though they're already making money. It's a player versus player market. If you do not take this seriously, you're not going to make it. Only a few percent of traders make it, and those few percents are people that continuously put in the effort and put in the time to keep on improving themselves over and over again. So if you just backtest or look at the charts every once in a while, you're trading against people like me and probably other people out there that put in way more effort and way more time. So take this shit seriously, okay? Otherwise, trust me, don't even get started because you're not gonna make it. Okay, you're not gonna make it. And if you're watching this, this is already a sign that you're actually putting in the time and putting in the effort. But I want you to also know that watching me only is not gonna do the job for you. You have to do this yourself. So what I would suggest you to do, okay, is before watching this video, start at the 29th of September, 5:30. Start there and backtest for X amount of days or weeks, okay? Until you have taken 20 to 30 trades. Then come back after this video or after you're done backtesting, then come back to this video and watch me go over the same price action as you did and then learn from me if you want to learn from me, okay? If you want to learn from me and the exact trades I take and how I analyze the markets, I'm going to keep on talking during the backtesting. So do it yourself first, note down all your trades, then watch me do it and learn from it, okay? So I think that's an important add. And then let's get into it. Got my earphones in. Some coffee. Okay. Just bearish price action, market structure trending down. Again, bearish break. More bearish breaks. At these points in time, you don't really want to start looking for continuation shorts because it could just turn around anytime because we are in a significant swing point for longs. Oh yeah, I don't have the 1 minute. I forgot. Okay. What day is Friday, 8 p.m.? Okay. Like normally you could take this trade. It's not really worth it risk to reward perspective. Like if you still had an objective below you waiting to get hit, you can take these market structure continuation trades, but we're in support now. So I wouldn't risk it. We'll move my stop to here. If it was a trade. And then you would have got it hit. So it did end up working. It kind of had a little fake out here, breaking local structure. But you just keep your stop above that high. And you would have been good. Okay? Trade I would have taken if there was still an objective below us to get hit. But there wasn't. So wouldn't take this market structure continuation trade. I would look for a potential range creation. Let's zoom out. Yeah. Yeah, so any range could be an accumulation in here. There's not really any structure to confirm an entry until here. And you broke structure. Back to bearish here. Still went higher. SFPing your more important high. You could take this trade if you get a structure confirmation. On the lower time frame, you would have 1, 2. You can even go to 3, and then there's an LPS. Probably if you zoom out, it's just a 1, 2, and 3. Yeah, 1, 2, and 3. If you get a structure confirmation in here, oh, I would take it. And there's 0 confirmation. Okay. Looking at this for potential model 1, but it could be a potential model 1 where this was your initial range low and your tap 1, tap 2 in getting a model 1, and you have your break here. However, this was a market structure break. Let me test. It was a market structure break, but it could be a range deviation. Do I want to enter on the break? I'm not feeling it. I'm looking for an SFP. No. What you can do, since it was a market structure break, so you can expect a lower high for a lower low, but it could also be a range deviation, right? So in this situation, what I would do is also check the volume profile, and you're rejecting from the volume area low, okay? So for a model 1, I normally don't take it as a requirement to also break back inside the volume profile, but it's still important to know or to pull it to see where it is, just because it shows you if this is like an actual confirmed range with price action equally spread out or not, you know, because you have a break back inside here, but is it actually a range deviation with a break back inside? If you have a break that's not back inside the volume profile, I wouldn't consider it a break back inside the range per se. If it was an SFP, it would have been another story, but it was a break of structure, not an SFP. So you can expect a lower high for a lower low, but is it going to be a range deviation? Well, you did not break back inside the volume profile, so it would have been a bit risky. If you entered on the break and you see us rejecting from the volume area low, I will put my stop to break even. What we could do is come back here for a potential retest, for like a test of the model 1. That could happen, but I would want a reconfirmation, and I don't think we're going to get one. But if we get a reconfirmation here, I will take it for sure. No, so you didn't get anything. So that just shows that if you don't have an SFP with a break, and it's actually just a break of structure of the range low, and you break back inside, but you don't break back inside the volume profile, you still have to be very careful of it being a lower high for a lower low. Great decision of not touching it. And a potential accumulation that's failing is actually even more bearish than bullish, of course. This is Monday. Oh, and you have to be careful of the time, of course. It's a Monday. I wasn't even aware of that. I should pay more attention to the times. Monday during Asia. Yeah, it's not the best time to trade as well. Okay, now we're getting closer to London Open. Checking for some resistances above us. There's not that much. Only you see this. So our 15-minute and our 10-minute high. Yeah. Could get a short in there on London Open. That's our Asia high. Asia low has been taken. It's a pretty big squeeze up. Even pre-London. So this is the typical example of a, oh, not even, we SFP'd it. I was about to say fake break, but it was the only clear retest zone above our market structure point. However, unless this was 1 minute structure, which I cannot confirm, if that's 1 minute structure, you could try a short. If this was valid 1 minute structure, you could try a short on that break. Okay? But I'm not going to put it in here because I don't know for sure. Would I target the low? No. Reasoning for me not targeting the low is because at any given time, this could turn into an accumulation because we're in higher time frame support. So any short I would keep as a scalp. So between 2.5 and 3 RR, that would be amazing for me. But I'm not going to count that trade just because there's no structure in here. But it's a good potential trade setup. Yeah, London pushes open just for a lower high and a lower low. And lower we go. Oh boy. Goddamn. Dumping. Would definitely look for a short in this flip zone. Again, I would need a reconfirmation. We don't get it. To retest POIs. SFP, your market structure low. Higher you go. You tap into that flip zone. Kinda. breaking structure here. It's not really a good risk to reward. 0.9, that's not worth it. I have to keep it here. This could work, but I wouldn't take it in real life. Hence the bigger situation that's going on and the poorer risk to reward. I would definitely move my stop after this break above that high. And you would hit your target. Did have a few wicks. I think there was a news event. If this was a news event at 4, I would have closed it as well beforehand. So it would have been like a break-even trade, or if this was not news but just crazy volatility or something, then you would have a winning trade, but it was only 1.3 and the risk was not worth it for me. Again, but 2 structure confirmation trades that did end up working. It's looking like a potential PO3. I'm not gonna lie. This could be a PO3, but I don't see a confirmation for entry. Where this is your range right here. We have our range, we have our manipulation. This is actually a valid manipulation since you have a Wyckoff model 2. Your 1 tap, 2 tap, 3 tap. And you have your return to zone. But more than a 2-minute, if there was in this leg between this low or this high and that low, you got a structure break back to bullish, I would have given it a shot for sure. Take a tiny partial here. If you SFP it and come back down, if you break it, target all the way up there. Timing wise, this is a range during like London session, and then New York opens, pushes price down, and a few hours into New York you can get a PO3. That's normal. That could definitely happen. Entry, I don't think so. There's no confirmation here. You bounced from demand, SFP'd it, and then broke back to bearish. So that's not the best sign for a PO3. Since the PO3 needs to be aggressive, you would expect just a squeeze up, right? Not a SFP of your high and an immediate break back to bearish. Very, very tight price action in here. And then it becomes a no trading time zone. So that PO3 idea definitely died off, and the indication was that immediate break back to bearish. And then we dumped further from there. Okay. Then we're pretty low in that demand zone now. Damn. I also told you guys that, yo, the moment this starts squeezing is gonna be insane. Because the way we come down here, that sideways downwards trend, same way that we did over here. I remember talking about it last time. That's like once the time is right, that shit's gonna squeeze. That's definitely gonna squeeze once it starts squeezing. Asia opens. We die down from there. Again, broke back to bearish. It does happen with gold sometimes that you recover like 90% of an order block and then it just pumps out of nowhere. This is your Asia low and your market structure low. This is your market structure high above your Asia high. Okay. And then we're coming into London. This is your most important internal low. London came down, higher low, higher high, push price up. Actually breaking structure. So that's your first big bullish break. Or I wouldn't call it big. But that's your first bullish break though. So that's showing something. In this whole move down, we've had no bullish breaks. So if and we're at that 90% plus recovering of the order block. So It's showing some signs of strength. It's definitely showing some signs of strength. Preferably, we create a new range here, and it will be an easy accumulation play for potential swing longs, okay? That's what I'm hoping for. But it is showing the first signs of strength by breaking bullish. It could just be a fake break in supply. We have to be aware of that. If it really wants to reverse, it just follows this internal trend. This one. Bounce from the demand. You don't really have a reconfirmation though. Oh, was it already mitigated? Ah, that's already mitigated. Maybe a little reaccumulation here after breaking structure. Targeting up to X. Oh, no, it already went higher. Okay. If this was 1 minute structure, maybe you could have tried it, but I wouldn't. Nah, no, I wouldn't do it. Now we can actually look at it from a different perspective. That's your range high. I don't know if that's 1 minute structure. For now, we have to use this one. If this is 1 minute structure, if that's 1 minute structure, I would have tried it. That was even a reason to come higher. Potentially target here. It is going to be a distribution to just create a bigger range. This bigger range that we were talking about. It's a very typical scenario where you have a pretty tight range. So you have a range that's pretty tight, leaving a return to zone like this, and then you just pop up, and then you go down. It's like it's a very tight, narrow range. You can tell by the volume profile. Very, very tight here. Almost only volume in this price point, and then you go down, you leave that return to zone, and then you pop up, and then you come down. It's a very quick play since there's not that much price action above nor below. But I just don't know if this is a structure break. Okay, if this is a structure break on the 1, you can try it. I just can't go on the 1. Where was that volume area high? There you go. back tested the supply. Now you broke 2-minute structure as well. You do have to be aware that initially you already swept the range low. So at any given time, it could turn into an accumulation. Like, we always have to be aware of that. If you swept the low once and you come back down after sweeping the high, you have to be aware that it can turn into an accumulation anytime. After entering there, I would already de-risk myself now. Okay? There's no reason to go higher from that. If you go higher from there, I think we can maybe create a Model 1 or something. Try to accumulate in here. And then there was your target. Okay, so it would have been, again, a winning trade. But these all depend on if it was 1-minute structure or not. Okay? So far, it has been working out, but it all depends if it's 1-minute structure. And yeah, we broke 2-minute here, but if I don't want to enter here just to target here. I don't want to enter in a discount with a stop pretty big just to target the range low. That's very risky. Now it could turn into a potential Model 1. If that's the case, we have to be aware of this high and this high to break back the bullish. And I'm indicating on this 1, 2, 3. Checking if there's supply above in the range. You did have your break here. That's pretty damn aggressive. But there's no way that's something risk to reward worthy. And again, now you have to be aware that this can turn into distribution, but normally with Model 1s, that doesn't happen that often. I would not enter there, but let's see. And there's your target. Okay. Now, can this turn into Model 1? 100% it can. 100% it can. But again, is there structure in here to confirm an entry? There probably isn't. There probably isn't. If there was structure in this little upwards leg that broke back the bearish, like this, after the Model 1, I would short it, but oh, whoa. I think there was news here. Again, clearly showing that price action will show you what the news is going to be, because we had the Model 1. This can just be the test of the Model 1. But I'm on the 2-minute and it doesn't look like there's any structure in here. If there was structure that broke back the bearish, I would have shorted. Okay? But again, we're on the right side of where price is heading towards. So recap of this little range is we had a range that was tightening up right here. Tightening up. We got the pop. We got the move down. And then from here we accumulated just to go over into a distribution. Why did it do that? Well, maybe there was some more liquidity to grab here, or like a little supply zone that needed to be hit. You name it, right? As you can see, we still had this little range supply above us. That was unmitigated. So price just needed to tap that, grab a bit more liquidity, and then go down. But you don't have to predict that, but you have to be aware of it, you know? You just have to be aware of it. So we did break back the bullish, but immediately followed after the break was a Model 1 distribution. We followed price nicely, but there just wasn't an entry, which is okay. Okay, you don't have to catch every move. You just have to analyze and grab your chance into thinking when price is going to go in your direction. Demand in here. And it's kind of your only demand, and it's part of some sort of a demand chain. So I think we can get a bounce in here because we're following, or we're going down pretty aggressively. So as a relief, a bounce from here. Maybe bounce from here, and we can take a short from here. Because this is clearly showing market maker involvement. Because we had that distribution at the top. Oh, whoa. Okay, well, we got the bounce. We got the bounce. And we got the rejection. And higher we went. Oh, that was unexpected. There was no confirmation in here. Again, no confirmation in there. Did we break structure? Let me just double check. Oh, no, we didn't. Look. That's why you definitely needed a reconfirmation in here. As I said, we had no confirmation, but it was also an SFP. Yeah, it was a clear SFP. Clear SFP. Okay. It's just nothing but liquidity here. Still hoping on a bigger range here. Very poor break here. Like, after such a big move, if it was going to be more bullish, you would expect a bigger break. This was also actually New York Open. I need to pay more attention to that. The timings. This was a New York Open. I had that first model one. So on New York Open, you can always expect fast moves, right? So exactly on New York Open, like literally exact. We had to move up and then the move down. That's good to pay attention to. Now we're clearly ranging here. Clearly ranging. If we break down from this range, I'll neglect this one and I'll pull this one. Okay. Very focused price action. There's really a no trading zone those hours. I don't know. That's 1 minute structure. Probably have some resistance up here. I'm looking at this local range as an accumulation play, but I wouldn't trade these hours. This is Asia. Not a big fan of that range at all. But you could have a 1, a 2, and a 3. Failed to break structure the first time. Wouldn't take it. Just timing wise and the way this is spread out and how tiny the shallow the SFPs are, not a big fan. And there you go. Very dead price action. I think now we can put this bigger one. Yeah. I'm already gonna tell you, sweep of that low so is an easy play. With confirmations, of course. Very nice divided. This is actually an SFP, ever so slightly. And you broke back to bearish there. There's in general, there's no support below us. Oh, whoa. There's no support below us because we bounced from the only one that was there, which was that 30-minute zone. We have very tight price action here, but we are trending down. This was your 5-minute high. At first, I thought we didn't SFP it, but we actually did. If I zoom in now even more, you can see it's an SFP. This is where you got your break, and this is probably retest supply right here. So on this rejection candle, you could actually give this a shot, and you could target here, just this low, see what happens at that low, and potentially even target here. That is what I would have done normally, but I was kind of late with seeing it, that this was an SFP, and I already clicked further. So now I can already see the result from that trade, right? So I don't want to put it in the chart now because that's a bit cheating. But normally, yeah, the rejection on here could have been a short. Just as the market structure continuation trade. Look what happens at that low, and then potentially target here. Okay. So let's see. That's easy. And this is also a clear sign of, yes, you can take some profits here, but where's the SFP with the structure change and higher, right? There's no reason for here to fully close the trade. Maybe take some profits right here, then below the last liquidity point at these equal lows right here, and then the low. The moment you broke this low, you move your stop from over there to over there, and then the moment you hit your TP, I would just de-risk myself. Okay? Timing wise, nothing that special. Okay. This is the new retest zone. Would have stopped out of the trade on the rest. But it could still put in the lower high here. But I wouldn't risk it because you're short, and you're in the discount section of this bigger range after sweeping all liquidity, because this was the last liquidity right here. Well, I haven't used that in a minute, but this one. This is starting to look more and more like a range though, so I'm really happy with that. Because this is the point. Literally, this is the point to create an accumulation. Let me drink some of my water. This is also just an easy squeeze. If this is 1 minute structure, which could very well be, you could give it a shot. But I like it way less now because the only thing you can target for is this extreme point. Not even just like inside the range liquidity like here, because you already grabbed it here. So it does get riskier and riskier because you really just have to target this low. But if that's 1 minute structure, you can short it. Look what happens at this low. If you break that low, watch for potential pullback, and then grab these lows here. You're breaking structure back to bullish here. So if you were short from this 1 minute break, you have to watch out because it just continue this 2 minute pull. And then broke back to bearish. So maybe that's the range. Okay. That was an easy squeeze from these highs. Hence this bullish candle. We went from extreme point to extreme point regarding we grabbed extreme liquidity and now we're hitting extreme supply, but we're not taking the extreme market structure points. Really just inside the range and having no entry. New York is about to open. London lows. So within the range, we've swept all Asia liquidity. London is below us. If we break structure and we get a good risk to reward entry, we could try to short it down. What's this high? did get the break, but no confirmation. I do like how we're having the internal rotations because it's just building more and more liquidity for these 2 points. Very, very, very tight price action here. Breaking structure back inside. And then since then, we just had a slow grind down. No setups. No setups. But the way we're coming down, we're leaving loads and loads of liquidity. You have loads and loads of liquidity here. I would grab it from this point on, because you still have some resistance here. Just squeeze through it. Trying to get back inside. We're in a no trading time zone. I didn't long on this break simply because it isn't an entry model for me. They get the acceptance back inside, squeezed higher for the liquidity. This is all during Asia. There's not really any resistance or support. I was looking at this. That's why I put this in here, but like there wasn't really. I wouldn't call it a high probability setup at all. Yeah, look at that. That's weird as fuck. Okay. This is just a simple structure confirmation trade. You had the S&P of the high and you broke it here, but from a risk to reward perspective, like those trades are just not worth it. Just not worth it. That's why I didn't say anything taking it. Like at the val, nah, bro. Potential model one here. You get the break, but tapping the supply. This is like the ideal setup. Grapple liquidity, hit supply, but again, the risk to reward, guys. The break is all the way down here. Stop. Target. You deviate low, so you have to be aware of accumulation as well. Even if you come back for a retest, like you have this breaker here, which is just the same as range supply but more defined. Slice through it. It's a pretty harsh recovery. Yeah, no. Didn't end up working. But there was also no entry. You can argue that it turned into a 1, 2, 3. You see, I have to be aware of all that stuff. Too much stuff. But if we zoom out, we had a local model 1 that did not work. Yeah, there's also no entry confirmation. And you already took the low, so you had to be aware of a potential accumulation. Now, this could turn into a bigger distribution. Let's see what happens here. Is this 1 minute market structure is the question. If it is, I would already short here, stop here, target here. However, you do have liquidity here that wasn't grabbed. Overall, you are hovering around the volume area low, but it's kind of sketchy, and you do have good looking demand below you, but you also have good looking supply. If this is a 1 minute break, I'm gonna take it. I think this looks like 1 minute structure. I just can't. If this is 1 minute structure, the RR is there, risk to reward is there. Yeah, okay. I'm gonna take it. I'm gonna take it based on if this is 1 minute structure. Let's see. This would be your test. You already break here. Price shouldn't come higher than that point now. When you start trying to break it back to bullish here, was there demand? Not really. What is the highest time frame valid put to? I would close the trade here at break even. Literally here at break even, I would close the trade just because we SFP'd our more important low and we broke it back to bullish. Okay? Because it's still, it could have been a 1, it could have been a 2, it can be a 3. So we were up 2.8%, but with the model 1, your target is here. So no TP would have been hit. Break even trade. Okay. grab the Excel sheet. Trade number 9. What was the date? 5th of October, 12:44. Again, a short. This was a model. This was a 1.1. And that's it. Nothing special. Break even. We can say, I think the improvement point on this trade is that we had the potential of a Model 2 accumulation because we already swept the low ones here. We know that if it's going to be a Model 2, it likes to sweep the last liquidity, which was kind of this point if you look at it from a very micro market structure perspective. So maybe taking a partial at your extreme liquidity point, because it does have the possibility to become a Model 2, makes sense, okay? I think that can be the learning point here. So I'm going to say, while in a distribution, if there is the chance of an accumulation while being in a Model 2 distribution, partial TP at extreme demand / liquidity. So if there's a chance of an accumulation while being in a model, it should be a Model 1. If there's a chance of an accumulation while being in a Model 1 distribution, partial TP at extreme demand / liquidity. Yeah. That's the learning point here. Okay? That's saved. Auto save is on. Perfect. Yeah, that makes sense. But let's see how it develops here. Because it could turn into like a Model 2 distribution. If it's going to, it will probably reject from here. But risking money on it wouldn't be worth it. Just because the market structure SFP then broke back to bullish, right? Seeing higher you went can still be a Model 2. Because I said Model 2 likes to grab last liquidity. Last liquidity has been swept. Let me check one thing. If this breaks, this could be a short. Oh, well. Yeah, this this turned into a Model 2 distribution. It hit its target, but we did not get the re-entry because the break was this aggressive. Now, the thing is, you could argue, this was our initial entry. That's the Model 1. Okay. And then you have, if you just kept the trade open like this, you have a 3RR win in trade. Okay. 3.4R. Amazing. So why move the stop loss? The argument here is that potential distribution, or is that potential accumulation. That's really the problem here. Let's say price came down and it didn't take that low. Let's say, oh, it's really because you took the low. That was the issue here. So because you took the low here, this was your initial range, right? And then you took the high like this, and you could have a model 1. But you already swept the low, so there was a chance of an accumulation. Would you want to risk money if you're up 2.7% on a trade like this to get stopped out and lose money? You know what I mean? If there was no deviation on the low here, this was a higher low, and then you had the distribution with the move down to follow, yeah, I would keep my stop here because I know it could turn over into model 2 as well. Because in that situation, there wouldn't be a scenario where it could turn into an accumulation because you never took the initial range low. Now you did, so I wouldn't want to lose money on a trade like this. However, what you could argue as well is that if you took profit right here, why not take X amount of profit that if your stop loss gets hit here, you'll still be in profit. So that's really the learning point, that if we took profit right here, let's say we took out 50% and we realized a 1.3 because it was a 2.7, let's say we realized 1.3%, okay? Now if our stop loss gets hit, we're not risking 1% anymore, we're risking like 0.5%. So you make around a 1% gain even if your stop loss gets hit. In that situation, leave your stop loss above this point because that's the clear invalidation. Because you have to be aware that they can come back up for model 2. Okay? If you did not take any profits, I would do it the way I just did it, where I would de-risk myself because you SFP'd the low, you broke back the bullish, and it could be a 1, 2, and a 3 like this. But as you guys saw, I was watching for that reconfirmation. If I got the break here, I would short 100%, but the break was so big, the risk to reward wasn't worth it anymore. So it flows into each other that we should have taken profit here so we could keep our stop here, came back up, created a model 2 distribution, and then it hit its target. Okay? So it's unfortunate now, but that's where we learned from, right? If it did not take this low, if it did not deviate that low, I wouldn't move my stop. Okay? Okay, that's kind of this play right here. I don't know how this looks on the 1 minute. If on the 1 minute you did have a candle close before having that big move down, that's definitely a short. Because I'm anticipating that this is 1 minute structure because it looks like it. Okay. Timing wise, we're on Thursday. That was all like Asia bullshit, and then you came here. Accumulation, kind of distribution, all during London. And now we're an hour before New York. Okay. This is what we learn from, guys. I learn more from trades like these than from winning trades. Okay. Let me change my music playlist real quick. Okay. And it's such a clean distribution at the top that I won't. I'm not expecting this to turn into a model one just because this is so clean. It could happen though, but. No, there you go. Oh, fast move down. Was this in news? I don't think so. It's probably a fast move down because of all of the liquidity that has been built up on all these internal moves. God damn, I don't know what happened to my voice there, but it's probably a fast move down, like I said, because a lot of liquidity on the lows and highs were built up with this internal price action. However, where is our structure now? Really depends on on the moment it looks like, but let's do it for here now. Because this candle grabbed both. But we did finally grab the low. A very crucial point. If I had like spot positions on gold, I would literally as limit order or market order on that SFP alone. Leverage? No, I wouldn't. But like for spot buys on gold, this is the time. Because what we can expect there is a potential V-shape recovery. We actually kind of SFP'd that while breaking it back to bearish. So that's not the most bullish sign in the world. This will probably be wick supply. We're always going to watch for a model one. Okay. 1, 2, 3. That will be the biggest swing long I will ever open. If that happens, guys, I'm opening. I'm opening a swing long, and I'm targeting here. I'm not kidding. I'm targeting all the way up there. Okay. Well, we SFP the most fractal mark structure high. Broke it back to bearish. Probably rejected from some wick supply here. And then we took out the low. But do you want to shorten the discount section? Could be, but let's see what happens. Came back in for this extreme supply. But wick the low. Hit some demand right here. One, two. This could be a local 3, and then if we zoom out, it will just be one tap. But for now, it could give us the move up, and then later we can come back down for a bigger Model 2 or a Model 1. However, the risk to reward is probably not going to be there. You have to enter on this break to low-key target that high. But it will probably come to here and here, which is not more than a 1. But maybe we have a local scalp in here. Where you sweep the low once more. There you go. I don't know if that's structure. On the 1. Probably not. But now you have some structure. So I'm looking at this for potential model 1 or model 2 with the a local model 2 with the third hat having its own little model 1. No, that it respected supply and went lower. Maybe it will wants to grab all this liquidity. The way it's coming down here is leaving loads and loads of liquidity. I do think we could potentially get a squeeze up towards this horizontal line with the return to zone that we're having now. We did not sweep all liquidity, but we did break structure here. Highest time frame 3. Let me double check something on my thing. Best case scenario, we target here. Because it could work. It could work. It's valid. What's the volume profile doing? It's riskier, but it's valid. Boom, boom, boom. I would give it a shot. I would give it a shot. At least also up to there. And see what price does from there. Because this was around the POC. This is what is the timing of this trade. Thursday, potential target these equal highs. But especially that high. I'm not convinced that this is going to be the I'm not convinced that this is going to be the Wyckoff, because if you zoom out, you know this is nothing yet. This is just one tab, a 1 and a 2. Another 1, 2, 3. But on the local time frame, this could be, it could come all the way up there. It could for sure. Is there a reason to come lower? Target it from here. Target here, de-risk once you take the high. There you go. Break structure. It's only risk to reward worthy if you come back. That's why you enter on the retest and not on the break. 3 minute is the highest time frame. You take it. The break is not that convincing. It's not a break at all. There's no reason to come lower because we tapped the only demand. There's a 5 minute one, but I would not want to risk that. I would not want to risk that. Okay. And there you go. You would have been stopped out. Yeah, I would not want to risk that. But it could be an SFP. Okay, let's see what happens there. I didn't want to risk it. But there was a 5 minute demand zone below you that you could tap into, but I really wasn't feeling the tight price action. But let's see how it did develop and if you did take that high. Okay, let's stop right there. We did came up from there, or we did come up from there. So what I'm gonna call this was our entry, this was our stop, this was our initial target. We grabbed the high there, put it to break even. And moment of entry 18/18, 5 October. Oh. Why the fuck is it doing this? Was it 18/18? Yeah, 18/18. Confirmation. We actually have a long for once. This was a 3. Let me test something. Point 1. 3.13. I don't know why it's doing that bullshit. 3.13. Again, we're gonna call it break even. Let's see if it did hit that first target. Because we're entering that late territorium. And it looks like it's having a very narrow distribution. Where price should potentially, or should in theory, have an easy to squeeze liquidity. There you go. Okay. So this trade did end up working, and where I went wrong is that we have to think from a market maker perspective, right? Is if this was actually going to be a Model 2, I was I was thinking that the third tab needs to normally sweeps all liquidity, right? Meaning meaning price would have swept this low from a liquidity perspective. But it didn't. But market structure is still king, right? So on this retest, I would have given it a shot. Just because we have that nice return to zone and those equal highs up there. However, instead of breaking it aggressively, we didn't break it at all on the 3 minute. But there could have been a reason for that, which was that 5 minute order block with imbalance that we had here. If price were to sweep all liquidity here, and then we broke structure, I would be more sure that there was real market maker involvement. And in that scenario, I was like, okay, if we tap this demand zone and we SFP it, it's really leaving no reason behind to go lower, because then we swept all liquidity and we hit all demand. But because there was also a reason to come lower here, I was less confident in this demand zone. That was kind of my thought process. But we even broke in there. It's a 5 minute SFP, but not really 5 minute valid structure. Yeah, what I could have done is just watch what happened at the order block, and then once it bounced, just immediately move my stop to here, instead of just de-risking myself completely. Because it did ended up hitting our target, and potentially even higher. Okay, let's not zoom into or extend it too far, but in Excel I'm gonna write notes. How can I word it properly? I'll be like, while trailing, because we had this one before. Watch out for while trailing. Watch out for the memory that price could tap into. I don't know why it's giving me the dark. Yes, but I'm noting that down there, so I remember exactly why we got stopped out without looking back at it. But it's all about that first initial pullback here. If it swept those lows, I would be so much more confident, because then it would be like, okay, we tapped this demand, and now there's really no reason for price to come lower. But just because we had those lows here remaining, I was not that confident. That's okay. It's okay. We are rejecting from the supply now, though, instead of grabbing the equal highs. And we haven't broken any significant structure back to bullish. I would say a trade I would take with a 2% risk is this trade. For sure. Just the way it's building up, hitting all these supply zones, so they won't be there anymore if we get the confirmation here. That's very nice. Even coming up to here would be nice. So there's no supply stopping us from pumping. But now we're rejecting from supply. But a trade with a 2% risk that I would for sure take for way higher. I'm talking I would take profit here for my mental just to secure some things, but then, bro, you have liquidity here, inefficiency here, then you have your first supply here, but surpass that, and you can squeeze all of this. Oh, surpass that, and you can squeeze all of this. Yeah, I would target way higher. Way higher, yeah. I would watch my first main structure point, which is this high. So I would TP here. Okay, we'll talk about it once that happens, if that happens. But the way it's developing is giving me potential Model 1 vibes. But there's not really. Normally, you can also determine if there's a Model 1 if we have something on the left that still needs to be mitigated. But there's not really anything there that significantly. No. This is your main internal low. There you took those equal highs. Kind of having its own little distribution going on there. What time zone are we in? Oh, that's important. See, these were no trading zones. Then Asia low is here. This is kind of at the end of the Asia session. Friday. Last day of the week. You could try the scalp in there. That's just a trade I would only take if I was up in profit, and I would try a scalp like that. This potential Model 1 kind of failing to take out the high. It's not really an SFP, but still, it's a very poor break with a Model 1 distribution. But in general, I wouldn't be awake for this. So that's also a thing to mention. We're getting an aggressive move down from it, though. Breaking our main internal low. They're really wicking a lot on Friday during London Open. No reconfirmation there, which was needed because you grabbed the low before coming there, indicating a structure break back to bullish. What's the highest time frame valid pool of this internal? It's a nice volume profile. I would watch for a short like this. And a potential long scalp from here. Just trade the extreme points of this local range. Friday midday. And lower you went. Very aggressively. I think it was a news event. Now we're at a crucial point. Like an absolute crucial point. We're waiting for that model 1. The volume profile's very nice. Divided around the middle. Any structure break locally, I'm longing this 100,000%. I'm I'm anticipating that that's a 1 minute break. I'm anticipating that this is a 1 minute break because it looks like it. Okay. We come down here. So from the top, We come down. This is the lowest point. This is a 2-minute up candle. Okay. Then we come back down. Take the low once more. And we break back to bullish. This is my trade. 100,000%. I would enter here. Put my stop below that internal low. Because it really shouldn't come lower. Boom. Boom. Yeah. This is my long. The way we came down there, it's the perfect manipulation play. For our market structure confirmations, it's way less nice to come down in a fashion like that. Because it normally doesn't give us structure. But because we're in such a high probability long area, and we finally swept all that sell side liquidity that we're building up, and we're in this high time frame POI for potential swing long, and we do get that model 1. This is just the ultimate manipulation event for people to really be scared of gold really breaking down. But no, it's just a model 1, and we're just going to massively pump from here. This would be it would be a 4% game. If this is 1-minute structure, I'm entering with a 2% risk on this trade for sure. It should fail this pretty fast, and then above it is just liquidity. And then we have some resistance here, but I would never take profit there. We've never taken the initial range high, so that's very good for our long setup. It's a 4 risk to reward. What's the timing of this entry? Let's look at the timing. 14:30, probably a news event, and you know how news events work, right? It's a sell to buy or a sell to buy to sell. That's normally how it works. But it's the perfect setup. It's the perfect setup. I would take it with a 2% risk. Because you need to know as a trader when to double down. Like, we wait for high confidence plays, especially in high confidence play like this, and then you can double down. So I would definitely target here, of course, but there's a big but. This can run. But I don't want to bother holding this trade in the back of our minds during the back testing. So what I'm gonna do is I'm gonna say that we're at a 2% risk. So I'm gonna take out 25% here. We will be up 8%. We will realize 2. Okay. We will realize 2. The other, I would literally be around like here. Take a TP here. Take a TP there. And then take a TP here. And maybe also here. Let's zoom in. Let's see what happens. Let's see if we hit that TP1. %2 risk. This should be easy to sweep liquidity. Get the rejection from the only resistance that's there. Almost tap this demand. Now we have a higher low, a higher high. I would de-risk myself on this position. And we would hit TP. Okay. So we would have an 8% gain here. Okay. The timing is also perfect. We open, New York brings us down. Higher low, higher high, higher low, higher high. Pretty nice. This is an 8% game. For now, let's just put 8% there. And then if we squeeze from here, we're just gonna round it up. But mind you, this is we're talking about this. Literally, we're talking about this. I have to admit, I'm not the best swing trader, so in replay mode, it's a bit different because everything goes by faster. But this is a high probability trade. I'm talking high. Very, very, very high. What would the trade be if we actually target? I'm pretty curious. It will be 117%, since we have a 2% risk if we do not take any take profits at all, which is never going to be the case, of course. But this is the potential. So let's just note down the trade. But this is the clear indication of, I was talking about how this was looking like it was going to be a Model 1 ever since we were here. By the way, it was building, it was mitigating, it was leaving liquidity below us, it was mitigating all supply. And that's normally what happens when you're going to have a Model 1, where you don't really break significant structure from the top down, because you failed to break it here properly, failed to break it there properly, and you're leaving lots of liquidity below you. That's normally when the Model 1 occurs. Never took the initial range high, so it was clear TP right there. We have lots of liquidity above us, high time frame POI. But locally speaking, this was a 1.1 1.13. Yeah, 1.13. 1.13 trade. Meaning of the entry. 14. 1456. We got a we got a long 6 10 2023. For now I'm gonna just write 8.1%. It's like that 4.05 game. We're gonna say 75% still running. Should I do it like that? That's how I would normally do it. No, okay, I'm gonna do this. I'm gonna say 4% here, and then 50% still running, as if we took a 50% TP. At the end of our back testing, if this is still running, then I'll just realize it. Boom. But see how, we just traded this whole week, right? We traded this whole week, and we got all the moves here, you know, and we saw the potential like on these local moves. And we kind of knew what price was going to do, but we couldn't get an entry. This was like the internal liquidity sweep, you know, local break here, but it's not in our entry model. It was really an internal week, and then on Friday we decided to grab both sides. But right now in the back testing, we are only trading gold. However, normally I would also watch euro and maybe some crypto pairs, but really be patient because normally I aim for 10% a week. Well, this could be the trade that gives you 10% in one trade. Why in one trade? Because we have our entry models and we know that the entry models work good. So, of the entry models itself, the higher probability ones are Wyckoff Model 1s. This was a high probability Wyckoff Model 1 just because of where we are on the gold chart, a high time frame POI. POI stands for point of interest. So knowing when you can double down is very, very, very crucial. And this was one of those moments where you could double down, because then you can literally still hit your weekly goal with only one trade. So yeah, let's see what happens from here. Okay, we know that down 50% TP, 4% still running. Stop loss is a break even now. No need to lose any more money or risk any more money on this trade. It should be a pretty easy squeeze. Let's do some analysis. This is the next big thing, breaking past this resistance. Let's get rid of this one. We know that we're in a high time frame POI. This is an important high. This is the fractal one, and then zooming in that leg. That's an important POI. Yeah. See if we can get any continuation trades. If this was a 1 minute structure change, you could feel risky and take it. Scalp it up towards that high, but you're SFPing the 2 now. But it's very normal for price. Very normal for price to have an aggressive expansion, hit the range high, kind of a relief retrace. So relief move, and then you still go higher. Still putting a higher low for a higher high. So it would have been risky, because if you entered on that retest and you SFP to 2 and you wanted to de-risk yourself, you would have been stopped out on this exact move. And there you break it back to bearish. We're entering the end of the week. I wouldn't be trading here anymore on Friday, 10 p.m. Again, that internal rotation, it likes to do that. Oh, whoa. Oh, okay, now Monday opens and oh, god damn. Holy smokes. Okay. Okay, Monday opens and we pump. And we pump. So the long is the long is vibing. The long is definitely vibing. This is good support now. Literally swept all liquidity because this is more supply. That's clean. This whole move. This is London, Asia. Or London, Asia, Monday, Asia. Could have an internal Wyckoff here. We do have a nice demand zone here. No. Like the invalidation is above that high. You would have to enter on the retrace. How did the break look? It was a break. Should have pulled it out sooner. This can be a potential trade. And the moment you take this, I have to check if there's supply above. We do got a 10-minute block. But I would want a reconfirmation if we come for that. Enter there. Put your stop to break even the moment you take that low. There you go. Boom, boom, boom. Not even grab the low. Break back to bullish. I'm not filling this in because I was too late with pulling it. I already saw the move down, so. Let's see if we can get something in here now. It's like I'm missing something, but my range. It's looking like this is gonna be in distribution, but it's all internal and there's no confirmation. Oh. This looks like it's 1 minute structure. We are leaving liquidity here. It's taking its time for sure. This could be the LPSY. I don't know if it's a 1 minute structure or not. It should come down though. Yeah, there you go. Okay. It looks like it's 1 minute structure. If it's 1 minute structure, this is 100% the trade I would take. It's just I cannot use the 1. So it's kind of hard for me to say or not say. If this is 1 minute structure, this is for sure short. And like I'm not like stressing over that I cannot fill it in the Excel sheet now, because I know in real life if that's 1 minute structure, I would take the trade, right? You can clearly see the market maker involvement in this internal Y curve. You know, you have the 1, you have the 2, you have the 3. So you do have the 2 sweeps of the initial range high. Then you hit the extreme supply, aka the last supply remaining before coming towards the range high. And then on this move up, you did not take out this LPSY, because if you did, it wouldn't be the LPSY. This would be the LPSY. But it came very close to the point, didn't grab it, but grabbed all liquidity before, and then you broke structure. And this is actually an entry model that we haven't used of mine yet, and it's 2. Here. I'm gonna show you guys so you know I'm not capping. Give you a little sneak peek. Let me grab it. Boom. Boom. Isn't that beautiful? Let me get rid of this. Isn't that beautiful? So you have to believe me that I would definitely take this fucking trade if it was 1 minute structure. Look at that. Look at the similarities. Tap 1, tap 1. Tap 2, tap 2. Tap 3, tap 3. Here, let me put it even like this. This initial range. Boom. Right? 1 tap, 2 tap, 3 tap. And then this is the first initial LPSY right here, right? That will be technically this trade, but and Wyckoff can have two LPSYs. That's completely normal. So this would be the short. You see how is that? How that's similar? You see how is that? But yeah, this is two where I trade the LPSY of a Wyckoff, and you can see entry confirmation boss. That's the main confirmation, and then I have more variables, but we also have the return to zone, like I shown here. You know, that's also a variable. So that's very nice. So if this was 1 minute structure, okay, this would be for sure a trade. On the break would already be enough because the risk to reward would be 2.9. That's good enough. Okay. Then after the break, you come back up. You know, you put in the lower high, you break the structure low again. At that point in time, I'm moving my stop loss towards that high. Then you break it a few times. You can trail down, but again, watch out for the SFPs like we did here while trading stop loss. Watch out for the potential SFPs. But price initially should come to this low because we have this nice return to zone. Okay. This would be a 3% or a 2.9% gain. I'm not going to put it in the Excel sheet because I just didn't know if this was 1 minute structure. I should have though because it really looks like it, but that's my mistake. But you can clearly see the market maker involvement here, grabbing the high twice, hitting extreme supply, and then grabbing all the liquidity again, without disregarding the Wyckoff schematic because it couldn't take out that high and it didn't. So very nice internal Wyckoff, beautiful. I know in real life if this is 1 minute structure, I would take this for sure, like for sure. Okay. So if you took it, that's a big check mark for you. Okay. Now let's see what we can do with the extreme points. Let me sip some water. Let's see if we can grab along now. What's this time frame of this range? We're in a 5 minute range. I cannot go on to. This is definitely the high to break. What time? What? Let me see. Kind of accumulating here around the initial range lows. Oh shit. I wasn't. My bad. Okay. This is a trade. This is for sure a trade. Let me grab it again. I would target that high. Okay, so you have your range, right? You have your range, range high, range low. From a range trading perspective, this is trading the second tap, okay? For the second tap, you preferably want to break back inside the volume profile, which would be the break right around here. But then from a risk to reward perspective, it wouldn't really be worth it. You can do something like this, and you couldn't really target that high because it's only a second tap. With a Wyckoff, you can target the extreme point, but you don't have to target, or you can't always target the extreme point on a second tap trade. However, the second tap itself was a little Wyckoff schematic, right? Where you clearly have a 1, you have a 2. This is probably something like a 1-minute break, or even if it's not, it doesn't really matter, because then you come back again right here and you break structure back to bullish. And this is like a nice candle break because it gives us a good RR. So you can enter here, put your stop below the third tap low. There you go. And then where I would target is just the return to zone, but not the extreme point of the return to zone. So I would target right on there. Oh, let me get rid of that black drawn. Let's see if that hits. There you go. So there would have been a nice little 2% scalp. And just because I just gave you guys some sauce, I'm going to add this. I saw it a bit too late because I clicked too far forward. But, you know, we're not cheating ourselves. This is an entry model. It's actually combining entry models, which is really nice. You'll see that now how I node it down. If you guys are here watching this, by the way, 2.5 hours in, you're a warrior, bro. I love you. Okay, so how we're gonna note this down is it's trade number 12. It's a long. Now we're only longing. It's 16/14, the 9th of October. So it's 16/14, 9, 10, 2023. Confirmation is 3.1. Let me see. It's 3 plus 5.2. Boom. Nice. The gain 2.08. Like you're in a very bullish environment, so technically speaking, you should actually let your runners run. Gold loves to do that. Once it starts, Once it starts its bullish trend, it loves to have it a range, deviate the range low, and then just continue higher, like continue ripping higher. So you should actually let your runners run, okay? Saying that, I'm gonna take a 75. I hate doing those 75% TPs one with noting it down. Okay, let's do it, because it's something I need to get better at. Letting runners run. So 75% of 2. My brains aren't working anymore, bro. 75% of 2 is 1.5. So we have 1.5%. Wait. We have 1%, and then 25%. Still running. Mind you, these are still running. These are printing. Absolute printing. Great. I'll exit if we take the range high with a structure change. Back to bearish. Broke it back to bearish here. Stop as entry, guys. This is the more important low. You're backed by demand here, though. And you actually rip higher after SFPing that low. It's not really a 10-minute range, but it would be nice. Well, not really anymore. You can also argue, by the way, I'm just seeing this now, but it just shows how you can interpret things from a different perspective. You could also say this is a 1, this is a 2, and this is a 3, right? There wasn't really any structure in here to confirm an entry, but you could argue that, right? You can look at it from two perspectives. Using my perspective, though, you actually got an entry here. Otherwise, you couldn't get an entry. And higher you rip. Let me see, what was our timing of entry? It was in New York. Then we kind of chilled from there. And then when the session was about to close, we started pumping. The range supply kind of starts here. Like where we're at right now. Well, look at the range supply started here. Then this is the more refined one. And then even this is the even more refined one. I would love to feel that inefficiency. These are kind of no trade zones. This is where we have our range. It was a 50-minute SFP. It could be a Model 2. It's pretty steep regarding this. 1, 2, 3. It could work. I just the third tab does the traditional grabbing everything besides the extreme point, so that's good. You did break structure. Let's check the volume profile. You have the range inefficiency actually. There's not that much below you. I just don't like the way this just like presents itself, because this is such an aggressive move. But it could work, but I'm not gonna take it. Actually hitting its target. Wow. What would have that? What would that have been? I can't even talk anymore. If you were in this trade, Loki, I'm gonna note down. I should have taken this because it was a valid model too, and you did get the break, and you had the range inefficiency. So what I'm gonna do regarding this, so I'm gonna actually add something here. I'm gonna say 13. The 10th of October, 510. It's about, these are also the after hours lows, Asia highs. 5. What would the risk to reward be on the break? No, not really worth it. Tenth of October, 056. 10/10/2023. Short. This was a 3 point. You can say you're trading the third tap because you're waiting for the break here, but at the same time it could be kind of the LPSY as well. I'm gonna say model 2. $3.23. 3.23. 3.23 would have been 3.84%. Did not take the trade. Should, but should have. And we're gonna actually make this a different color. Let's make it like a sexy color. What? What's wrong with my fucking thing? Okay, so regarding blue, right? We're not gonna count these in our results, but we're just gonna note down that this is a trade that we should have taken, but we did not. Okay, and then you could also go back and realize like, oh, wait, I should have taken that trade. Why didn't I take the trade? Well, in this trade, I just didn't like the way how this was horizontally, and we had that sharp V shape, and then the horizontal again. It kind of put my range a bit off, but then the third tab did what it was supposed to do, and you broke structure, and you had a good looking retest zone, right? So this could have been a valid entry, especially if you still have your long running, and this can be a nice hedge for a potential 3.8% gain. So we also had a nice return to zone. In general, it was a valid trade. The range was a bit different than I would like to have, but the entry model and the confirmation is there. So I also need to program my brain into, even if it doesn't look the best, but the entry model is there, I still have to take it. And that's what we're really noting down with this blue one, because then, if you see too many blue ones and they're all working, you start to realize if it's on black and white on paper, like, oh wait, I just have to take it because look, the confirmation, it is a valid confirmation, 3.23. If that happens, take the trade. You know what I mean? I'll rather lose 1% on this trade if it was valid than miss out on 3.8. So that's how we normally manipulate our brain into thinking it's okay that we did not take this trade because this and that, but that's just you trying to convince yourself of the good. But it was not good. I should have taken this trade. So we're really going to note this down, that if we start seeing too much blue, we should take the trade. And from here, we can start looking for longs again. At the same time, we were in a higher time frame POI, right? Like, there was the more refined one, but it started there. So any distribution could give us some sort of a pullback. However, the way we came down, we left loads and loads and loads and loads and loads of liquidity above. If we get a retest in the supply zone, I'm gonna cancel the short or the long from lower. Right now it's Tuesday. We SFP'd it, but he broke back the bearish. We come lower. We're at that support POI right now. Now I wouldn't anymore because we already hit this. Since on the higher time frame, it can still just be higher low for higher highs. Let's get rid of that. Let's make this one line. Have a nice little Model 1 redistribution here. That got invalidated very quickly. But there was no entry confirmation either way. But we're building up some nice sell side liquidity below us, so this could easily happen. Okay, so we tapped into this one. Okay, I would exit. I would just exit the long from here. I think no. I take that back. I take it back. I can do whatever I want. Okay. I take it back. I take it back. I want to trail it. I need to get better at that. So I take it back. Okay, the entry was here. The entry was right here. I want to trail it here. I think that makes the most sense. Because it can just continue this 1 hour to 2 hour structure. Okay? I'm going to trail it under this low. Because I think if it's going to put in a higher low for a higher high, it's going to be at this range demand right here. So, okay. I'm learning, guys. I take that back. Right here, we have the liquidity below us, and it looks like we are breaking... we are breaking that. So wouldn't be surprised to go lower from here. That's why I wanted to exit in the first place. Because this could happen, but it shouldn't stop me. Because it can easily take this low, wicket, and go higher, right? It's actually forming a pretty nice low. Nice SFPs here. Nice return to zone. I would start scaling in there. Hit more here. Stop here. Target this local high, knowing it could come higher. Okay. That did not work. I clicked buy too fast, but idea was we had the return to zone, we had the break. This was the second break because we SFP'd it first. On the 15-minute, we had those SFPs. It was the break back inside. The timing was decent too. That's fine. I cannot target the extreme point always, but we had that return to zone. So that's why I was targeting the high. this would be a first 1358, 1358. Then we have 10th of October, 10/10/2023. We had a long, it was, which confirmation was it? 5 point, it was a 5.2. It was 5.2 for sure. And then what I'm gonna say is entered on the second market structure. I understand what I mean. It's like I end on the second market structure, like meaning I didn't enter on this break, I ended on the second one. So this didn't work, and we can explain, or we can talk about why this didn't work. It could be just because we had that demand remaining below us that needed to get mitigated, right? That could very well be the case. But this is a entry confirmation. We swept sell side liquidity. We broke back inside. Broke back inside the volume profile. That is an entry model. We had to return to zone. So, we're just going to note it down. And then if you start seeing that your losses are coming from, let's note that down. If you start noticing that your losses are coming from fives, maybe we need to adapt 5, right? Okay. It's kind of SFPing that low. But in general, from here, it could put in a higher low for a higher high. Oh, okay. My screen is starting to lag. This recording is also pretty long already. So I need to get some groceries real quick before the supermarket closes. But I will literally continue after I come back from the supermarket, and the part 2 will follow immediately after. So this is just or the part 3 of the total picture. But the part 2 of this